Good evening, everybody, and welcome to another episode of the Money Mantra. I'm your girl Cha Cha, and today we are doing another book review, but this time we are actually on the charts and we're going to be focusing on the Candlestick Trading Bible by Munehisa Homma. I believe that's how you say his name, but really don't quote me, y'all. But yeah, it's a really nice book for people who want to take their trading seriously. It breaks it down into really practical ways and simple strategies that anybody can understand. If you understand basic trading terminology, which I will cover a little bit in this course today, because I am doing about 5 or 6 classes, just until we finish the whole book, just make sure that you are taking notes. If you don't know what something means, feel free to reach out to me at a later time and I'll explain it to you. Or you can just get the vocabulary list and flashcards from me as well. It's pretty simple. Just ask me after. So, today we're going to be starting with chapter 1. The overall book is just about candlestick trading strategies and understanding what candles actually are. Like a lot of people, whether you trade stocks, futures, bonds, cryptocurrencies, a market has to be analyzed. And essentially, what you're looking at are the candlesticks. The candlesticks tell you a lot about the price. The candlesticks let you know when you can get in the market, when you can get out of the market. The candlestick tells you the high, it tells you the low. And we're going to go over all those things today. Now, why I really like the Candlestick Trading Bible, the main reason is because you don't have to use a lot of indicators or you don't have to have your chart too crowded. Like I've heard a lot of people say that when they look at a trading chart, it's confusing, or it really throws them off because it's too many things. But once you find some indicators that you actually understand and can work with, you'll be fine. But even if you, don't find any indicators that you work with, you still can get some pretty profitable trades just off of understanding candlesticks alone. So in this case, it really is just letting you guys know that less is really more. And that's what we're going to be talking about today. So a candlestick, I'm going to go ahead and share my screen as well. And when you guys can see my screen, let me know. Just drop some sevens in the chat. Let me make sure I can see the chat. All right, awesome. So a candlestick literally is just the language of the market. If you've ever seen a trading chart, right? If you've ever tried to attempt to trade on your own, if you just check your stock news in the morning, you may see something like this. You may open your Cash app and you may see something like this, but a lot of people really don't know what they're looking at or what this means or how simple it really is to read. So I'm just going to break that down for you. This may be a review for some people, and it also may be new information for other people. So it may be a little bit redundant and basic, but that's okay, y'all. Don't worry. You don't need any special programs to actually do this. You can use TradingView. That's what I'm going to be using today for these examples. If you are doing high frequency trading, you can do the same type of analysis on your on your broker, whichever broker you use to trade HFX. For example, I use Pocket Option. If you're a traditional Forex trader, or if you want to get into Forex trading, there's an app called MetaTrader 4, and you can actually set up your charts and candles directly in the app to mirror what you've been looking at online, or if your lifestyle is more on the go. So it's really flexible. But before you are able to make money with these things, before you feel comfortable risking your money, it helps to know what you're actually looking at. So these are the candles, right? Now, on typical charts, you'll see one or two colors, right? So for the buying candles, right, or candles when the market is going up, they'll be green. And for the selling candles, or for when the market is going down, they'll be red. Sometimes for buying candles, you will see blue, but the colors aren't as important as the movement. Because again, if you're using a broker like Pocket Option, you can actually customize your chart 100%. And let's just say your favorite team is the Lakers, you can have purple and gold candles on the chart. So it's more so about knowing when these candles are opening, when these candles are closing, and just understand the anatomy of the candle in general. Now, a lot of people trade as a hobby, right? A lot of people just do this to make some extra money, but some people are professional traders, and these are the tools that they're using to analyze the market. So if you are somebody who wants to make some additional money, and you want to actually learn what's going on before you just put your money into something. Or even if you already invested into some ETFs, or you've invested into some futures or some cryptocurrencies, this is going to give you a little bit more insight as to what you're looking at so that you can become more profitable, right? So I'm not going to stress you guys out. Like I said, if at any time anything doesn't make sense, just feel free to ask a question. But this is pretty much basics, right? So we know that the green candles are for the buy, the red candles are for the sell. But before we get into anything else, we're going to talk about the different parts of the actual candlestick, right? So I'm going to go directly to the book. I want to go directly to the book for this, just so you guys can get a visual. And then we're going to go to the actual market, right? So here it says, what is a candlestick, right? It says Japanese candlesticks are formed using the open, high, low, and close of the chosen time frame. So what you're going to see most of the time is that each and every candle has two parts. It has the part that's filled in, which is called the real body of the candle. And this is telling you basically about the movement of the market for whatever your selected time frame is going to be. And then you have these sticks that you'll typically see, and we can look at this side by side where you see the book, right? And then you see the candlesticks in real time, right? And I'm only using Bitcoin right now because it's always moving versus maybe the foreign exchange market or the stock market, which it'll shut down and close sometimes. So we're going to be using Bitcoin just for today's example. So the real body of the candle pretty much tells you the price action within the chosen time frame that you choose. Now, if you're doing traditional standard forex trading, you will be looking at maybe a day, right? So each one of these candles would tell you the price action within a day. If you're doing something like stocks, you may want to look at it on a longer time frame, right? A weekly or monthly basis, and you could just change it. I'll go through these functions as well, but you can always change it based on what you're trading. But what I do want you guys to understand is that it never changes, right? The chart is going to look the same. Like the price action is going to be different, but what you're analyzing, which are the candles on the chart, is essentially going to stay the same, right? So these lines coming out of the candles, they can either be called wicks, right? Because it's a candle, or it can be called a shadow, right? So if the long stick is at the top, it's called the upper shadow. And if the stick is at the bottom, it's called a lower shadow, right? Now, again, these things may look simple. They're just rectangles, but it's telling you four things about the price. So in this case, in this example, the buying candle is going to be white and the selling candle is going to be black. Now, let's just pay attention to this one right here. Let's see if I can draw on the screen. Y'all know I love to draw on the screen. All right, so we're going to look at this candle right here. So this is the body. This is telling you the price action from the time the market open or the time this candle open, right? And buying candles or candles that are going up will always open at the bottom and they'll go up, right? They'll close at the top. They start at the bottom and they close at the top. And the selling candle will always open at the top and close at the bottom. So for example, if we were looking at the real chart, this is a buying candle. We see that price started right there. The market went up and price closed right there, right? But what the candle is also going to tell you is going to tell you what the high was for that time frame, what the low was for that time frame. And the same thing with the selling candle. The high is always going to be the tippy top of the wick. The low is always going to be the very bottom of the wick. The open for the red candles are going to be at the top because these are selling candles, which means price opened at a high point and then it went down, right? And for the buying candles, it means price opened down here and then the buyers were able to push the market up, right? Now, it's important to understand these parts of a candle because a lot of trading is about support and resistance. And you guys know I love support and resistance. Support and resistance is basically, y'all was supposed to be recording. Am I recording this? I hope so. Support and resistance basically tell you, like, it gives you a way to look at the highs and the lows without your mind going all crazy, right? Now, just to bring it back to the real chart for a second, We're going to put this on. We're going to leave it on a week basis. It really doesn't matter. But if you know what support and resistance is, it'll also make your trading a little bit easier. I'm going to just draw it instead of actually writing on the chart with the tools, because you guys know how to use the tools. Now, if you see, whenever you see wicks at the top, right, and then you don't see anything else above that, that's letting you know that price got up to a certain point and then it decided to come back down. Now, easy way to kind of track this, if you're only going to be using candles to trade and you want to limit your indicators, I would say if you see 2 to 3 wicks gathered, that's just telling you that you should definitely place a resistance line there, right? Now, one thing I like about TradingView or a lot of trading platforms that you can use, you have all of your tools right here. So we're going to use this, for example. We see that these 2 wicks are telling us that, let's just get a horizontal line, y'all. We can put a line right here, and this is telling us that price decided that at 30, this is Bitcoin, so it's just an example. At 32,232, price was resisted, right? We see these long shadows up here telling us that price tried to go higher than this line, but then it was stopped. And then it decided to sell. And as we know, Bitcoin is very, very low right now, right? Now, if we were traders and we were practicing, we would have been able to look at this chart and find multiple areas of resistance to see, all right, now I know they said Bitcoin was going up, but it's in a selling trend right now, which means you can still make money. Now you can get another horizontal line and literally just imagine if it's like a flat top, you don't see anything else above it. You can put a line right there. Whenever you see that there's an upper shadow or a wick at the top, you definitely want to put a resistance line right there, because that's most likely going to be a place that you can sell, right? If that makes sense, just drop some 7s in the chat. Thank you, Ruby. Now, the same thing is going to come into play when you talk about support lines, right? Resistance lines are just a place where you can physically see price didn't go any higher, and support lines are just a place where you can see that price didn't go any lower. Now, we can use this same line right here to see that we had long shadows at the bottom, and then before price could even reach that point, it was going back up, right? So if we were Bitcoin investors, which I'm currently in Bitcoin, right? I'm selling right now because Bitcoin is not going up the way everybody expected it to, but knowing how to look at these charts will let you know, okay, I can still get in on this action and make some money, right? So we can just look right here between these 2 lines. We have a support line and we have a resistance line, right? And we can go back even further in the past and we see another, if you guys can see my mouse moving, we see another long shadow, right? That could be another potential place to sell. Now, when it comes to trading and you're putting these support and resistance lines, these are the places that you're going to want to enter or exit the market, right? So right now, let's just say Bitcoin is at, let's just use this past example. Let's just say right now, Bitcoin was at 31,000, right? We could essentially set an order for 32,000 because a buy order, right? But it would have to be a long-term buy order because this is by the week. So this is a lot of weeks. You could set a buy at the bottom of this wick because you know price, based on what you're looking at with the candles, price is going to go back to at least 48,000, right? So it's important to know what support and resistance is, because if you can go back into the past and create these different levels just by looking at the candles, you can predict when you should be buying and when you should be selling, right? Now, that is just the basics of the candlestick anatomy, right? Now, another thing we're going to understand about the candles is the size of the candle actually matters. People ask this question all the time. Does the size of the candle matter? And the answer is yes, because it's telling you about how much momentum or power the current people that are in control of the market actually have. So just with common sense, right? We know that the longer candles means that this was a long trend. So if it's a green candle, it's telling you that the buyers were buying and they were buying for a lot of power. within that time frame. If it's a very small candle, it lets you know that they didn't really have that much control. And 9 times out of 10, there's going to be a reversal in the market. Now, a reversal just means that if the market was selling, like we can see right here, right? We're just using visuals right now. We can see that the market, right? Let's put a line right there. It started to sell up here. And then we see a long pattern, right, of red candles all the way down to here, right? So the market was selling for all of this time. And somebody who decided to get in here because they noticed this, they could have definitely made a profit on that sell. And that's one thing about, again, like just understanding the candles, you can know whether you should get in or not. Like if this is your first time, I feel like it's a lot of information, but if it's not, you're kind of like, okay, this definitely makes sense. A long body candle will tell you, okay, this was a great profitable moment. A short body candle will tell you either that there's a reversal or that side does not have that much power. And we are going to talk about this in a few seconds because there are actually candle patterns that you can use to let you know when a reversal is going to happen. So you're not so anxious about gambling, right? Because trading is not gambling, it's more so about the analysis. And this pattern right here is called the Morningstar Pattern. But I'm going to get into that after I go over the other two patterns that actually come before it, just because I'm trying to go in order of the book for you guys if you want to just go back and look at it. But the Morningstar pretty much will have a high volume candle, right? This is a long body candle versus a short body candle. This is short, this is short, this is short. Then you have a transitional candle, right? Which is kind of like a doji candle. And then you'll have another long body candle that matches the first candle. This is a great sign of a reversal. But again, we'll go into more detail in 1 second. But if you guys are following along so far, just drop some sevens in the chat. Like I said, this is just a candlestick review. And we are only going to be doing a few patterns today. But I'm going to be doing some more patterns on the next episode next time. So the length of the body, again, just tells you about the volume of what the current side was trying to do. So we see this was a long body candle, and then it continued to sell. It was a transitional candle, but then it decided that it wanted to continue to sell. And because it chose to keep selling, there was another long body candle telling us that if I'm breaking up, drop a 444. If I'm good, drop a 8. Let me know. 444 if I'm breaking up, 888 if I'm good. Okay, I'm gonna just assume I'm good and I'm gonna keep going. All right, thank you, y'all. So pretty much the length of the candle does tell you a lot about where price is trying to go and what it's trying to do as well. But one candle can tell you a lot, 2 candles can tell you a lot, but then 3 candles can also tell you a lot because that's getting into the actual candlestick patterns. So that's important. Now, the next thing that this book talks about, because I'm literally going in order just for it to, again, you may understand candles, but it could be one little thing that just be like, wow, this makes a lot more sense to me now. Now, the shadows, again, are the wicks that are on the candles. They're going to be the lines that are on the candles. If you have a long upper shadow, that's telling you that the sellers really tried to take control. I mean, the buyers really tried to take control, but then the sellers decided that they were actually going to push the market back down and let the trend continue to go that way. If there's a long bottom shadow, that tells you that the sellers almost had control, right? The sellers almost had control, but then the buyers were actually able to continuously push the price back up. So I'm gonna just leave the book here side by side, and then I'm gonna go to some real examples in the market so we can see when this happens, right? So if it has a long upper shadow, that means that the buyers were in control, but the sellers actually took back control and pushed the market down. If it has a long lower shadow, that means that the sellers had control, but then the buyers were able to push the market back up. So let's find an example of each of these and see if it makes sense. All right, so I think I can find a better one. Okay, so here's a really good example, right, of a long upper shadow. And let me just circle it so we don't get lost. Right, so we have a long upper shadow right here. And the long upper shadow, again, means that the sellers were in control, right? The sellers were in control, and then the buyers were able to push the price back up. Wait, let me make sure I'm not confusing y'all. If there's a long upper shadow, it means that the sellers were in control. No, the buyers were in control, and then the sellers pushed the price back down. Sorry, y'all. And the other one is that the sellers were in control, and then the buyers pushed the price back up. So if we look at this long upper shadow, again, we can see that the sellers were in control, but then the buyers took a little bit of control over the market. Now, this looks pretty small, but remember, we're using weeks. So it was selling for, this is 1 week, because each candle was representing a week, because that's what we have selected here. It was selling heavy for 1 week. Then it was selling heavy for another week, right? It was just selling. So people was like, oh, Bitcoin is going to continue to sell. But that's not what happened. They almost had it, but then the buyers actually turned the market around and they were able to get some momentum for these 3 weeks. And we basically know that based on this long upper shadow. Like, we knew that some buying momentum was coming after all that selling momentum, simply because this was the resistance. This was the resistance, right? Now let's find an example of the long lower shadow. Sorry, y'all. Let me erase that. And these examples, you can always use past examples, but I'm just using them now to demonstrate, just so y'all can get a visual. All right, so here we have a long lower shadow, again, where we see, well, let me not do that one. Let me do the one before it. We have a long lower shadow here where we can see that the buyers were in control for 2 weeks, and they wanted to really continue to push the price back up, but then there was some resistance from the sellers, and then they had control for 2 weeks. So anytime you see that there's a long shadow, either at the top or the bottom, it's just signaling that a reversal is coming, and the other side is pretty much resisting really hard, in case I did it backwards any of the times, because I'm sure I did. But I can just scroll, and I'm going to scroll, and I want you guys to just notice any long shadows, upper shadows, or long lower shadows that you see. And just let me know if that makes sense in letting you know when there's going to be a change in the market. I'm just going to scroll a little bit. And if you see any other examples of this, just go ahead and drop some 7s in the chat. And let me go to another pair really quick, because Bitcoin don't have enough history. All right, so I'm going to just use Euro USD on the day, just so we can have a more analysis or more to look at. All right, so I'm going to just scroll, and you guys should be able to see the examples there. Those long shadows, 9 times out of 10, pretty much, if you see a long wick at the top or bottom, just know that a reversal is coming. So if you were in this selling trade, let's just say, and this is actually a really great example, so let me circle it. Let's just say if you were in this selling trade right here, I'm only going to choose here because we can see that it was selling. It was red from here all the way down to here. So for a couple of days, about a week, it was selling. Let's just say you were selling this entire time, right? But then you noticed on the current candle that you was in the market, you was like, oh, wow, this wick getting kind of long. Well, I don't want to be in there for that, right? That's how you can know the market, okay, it's about to turn around. Like, it's about to turn around. Here's another example. We saw that we got some good buying momentum. We see that it's sold. But then on this candle, again, we see another long wick telling us that the market is not going to continuously do the same thing it was doing. It's going to change direction sooner or later. So that's just something that you can look out for if you're looking for some good setups. Because if you're not trading HFX, which is high frequency, you are going to have to analyze. Oh, sorry, I don't know what's happening. Sorry, let me refresh this. You are going to have to analyze on a higher time frame. And when you're analyzing on a higher time frame, you can look at more of the chart And if you notice these little things, it'll be easier for you to find trades, because if you know that, okay, there was a long wick here and I put my resistance line there, that'll be a great place to sell because the market is about to turn around, and vice versa. If you see a long wick at the bottom, then you know, okay, the market's about to actually turn around and buy. Now look right here. Look what's actually happening right here. This is a good example of the last 3 weeks for Euro USD. It was selling, and I'm gonna just circle it so y'all can see. It was selling, right? It was selling for 2 weeks, 3 weeks. Then we hit a long wick, right? And the long wick is telling you that there was a lot of resistance from the buyers trying to push the price back up. And then, oh, it says I'm running out of time, y'all. We may have to open another link. But look, we can see that it was selling all the way down, and then we have that long wick, and then it was buying. So if we were in the market when this was here, we would have known that, okay, we want to actually start looking for buys now because the market is going to turn around soon. So that's why I love that one. And that's pretty simple. And this is still with no indicators, is really just using the wicks and the candlesticks themselves to find setups. Now the next thing we're actually going to move into, and I probably will have to start another link because this one's going to be over in like 10 minutes, is some candlestick patterns. I mean, candlestick patterns are very specific looking candles that you can use, again, to help you find more profitable trades. So the first one, and this one is so easy to spot once you see it, it's kind of hard to unsee it. It's called the engulfing bar candlestick pattern. And this one pretty much is exactly what it looks like. Now, the market can either be going up, which is considered a bullish market, or it can be going down, which is considered a bearish market. Now, if you have a bearish engulfing bar, right? Hopefully you guys are taking notes because this is actually where it gets good. If you have a bearish engulfing bar, it's going to be 2 candles, right? That candle pattern will always have 2 candles, and the most recent candle, right? The dark candle, the selling candle, is literally going to be engulfing the previous candle, right? And it most likely will be a buying candle because it's telling you that the trend is changing. Now, in order for it to be engulfing the entire candle, this candle must literally cover the entire body of this candle. That's why it's called engulfing. Like if something is engulfed in flames, the entire thing is covered. And then they do give you an example in the book of how it will look. And we can see right here, there's a long black candle, but previous to the long black candle or long red candle, there's a very small white candle that is clearly engulfed, right? If you guys can see that, just drop some 3s in the chat. You can see that the second candle has clearly engulfed the previous candle, right? Now, if it's bearish engulfing, that's letting you know that the market is actually about to turn around and create a selling trend, which is exactly what happened. Now, let's look at this in real time and see if we can find a good example of that, which I'm pretty sure we can. I'm pretty sure we can. And again, it's okay if you have to go back in the past, because the more of your chart you can see and the more of these examples that you notice, it'll be like, wow, this is so simple. Okay, so this is a good one right here. Let me zoom in without losing it. All right, y'all. So we can see right here is a bearish engulfing, right? Because the red candle, which is the selling candle, is way, well, it's not way bigger, but the entire body of the green candle is within the body of the red candle. And just by noticing that, if we would have gotten to this trade, right? If we would have gotten to this trade on this week, I could move it down to a smaller time frame too. If we would have gotten to a trade for this week, and let's just say we stayed in for a month, that would have been about 30 pips, right? Now, if you're risking $1, you would have made $30 off of $1, right? For the month, if you was trading Euro USD, you would have made $30.60 off of that sell, which is not bad if you only risking $1 and if you only looked at a couple of candles to figure that out. Am I right or am I right? So I'm gonna just take it down to a smaller time frame because most people trade, they do analysis on multiple time frames. But right now, we're not talking about none of that. We just strictly looking at candle patterns. And then, of course, a bullish engulfing would be the opposite. All right, guys, here's another really good example. And if this is making sense and you can see it, here's another example here. Bearish engulfing, right? Now, if none of this was formed, all you need is the previous candle. And if the current candle has completely covered that previous candle, you got yourself a selling trend if the red candle is the start of the show. Now, since this is a 4-hour time frame, had we used this analysis and gotten into the trade here, and then we stayed into the trade for 12 hours, some people sleep for 12 hours, you could have made at least $8, right? If you're risking the smallest amount, you could have made at least $8, which is not bad. But if you're risking a higher amount, of course, you could have made hundreds of dollars just off of that simple candle pattern. Now, I'm going to find one more example just so you can see that this is really something you can look for, and you can set up your analysis based on the candle pattern that you choose. Because you may like this and be like, oh, I like engulfing candles. I'm about to only trade engulfing candles. You can do that. Use that as your guide for your setup. I'm just looking for another one. Because some people literally, when they trade, they only use this method. Like, so they just, all right, here's another one. Here's another one. Look at this, y'all. A perfect example. And this video is about to cut off, so I will have to start another link. But look at this. Another bearish engulfing pattern. We see a very small green candle that can literally fit into the entire body of this red candle. And if we would have chose to get into this sell, because we can see that it's going to continue to sell, then we could have made about, all the way to the bottom, we could have made about, depending on how much you're risking, you could have made $18. You could have made $180. You could have made $1,800 in about 28 hours off the candle pattern alone, right? So if this is making sense, y'all, the very first candle pattern that we're talking about today, just drop a MS in the chat. And then we want to get into some other ones that are really, really easy to recognize as well, like the different doji style candles, because those are actually my favorite. I love to trade dojis. I love to trade morning stars, because once you see it, you can't unsee it. So y'all, this link is about to end. If you want me to continue, because this was supposed to be a longer thing, but if you want me to continue going over the candlestick patterns that I wanted to review today, just drop a 3 in the chat. If you guys want to just pick it up on the next session, which will probably be tomorrow at 8, just drop 8 in the chat so we can finish it today. Drop some 7s, or we can finish it tomorrow. Drop some 8s. I'm gonna let y'all decide, and it'll be tomorrow at 8. And I'm also putting this on YouTube. So, all right, awesome. So I'm going to go ahead and send you guys the new link. I don't know why I just didn't use my regular link, but I'm going to send you guys the link and we will resume. So we'll be right back. But thank you for coming to part 1 of the Candlestick Trading Bible review. We'll be right back.